Hey, I wanted to talk a little bit about this kind of cool candle overlay script that I was trying to write one, and someone pointed out that it's been done before, and this actually ended up being a lot better than the one that I was doing because these look like actual candles overlaid over, a higher time frame candle overlaid over a lower time frame. And this is exactly what I wanted to do. I wanted to be able to see, say, the 30-minute. I think this is a 30-minute candle, and this is my 30-minute chart. So you look at these candles here, and you can see that these candles match up exactly. So they're being overlaid on here. It's just the dots are the upper and lower wicks of the higher time frame candle. And the neat thing is you can change this to be whatever you want. Any one of these you can change it to be an hour. So I was going to give up at that point, and I had sort of decided to just use this one, and this would have been the first study that I've used that wasn't one that I wrote. But as I started playing with it, I realized that there were some pretty significant drawbacks with how it was creating these candles. You go to 4 hours, and all of a sudden, everything's messed up. And I was like, well, why is this messed up? I mean, obviously, it's trying to draw the candle from here to here, but from the break to the break. But it's overlapping the actual higher level time frame candle, because obviously this candle thinks that it's supposed to be from here to here and here to here, but for whatever reason the script is trying to draw it from here to here. So I started digging into the script a little bit and looking at what it did, and it was actually really really cool to go through and understand how they were doing what they were doing. So I'm going to start with this one. And this is as I got it, and then I'll walk through what they're doing, how they're doing it, and then I'll walk through my updates, which has some tips and tricks on how to use some of these features and how to correct this for the higher time frames, like the solution that I came up with. So what it's doing is it's taking a modulo of the current or the higher time frame. So if the default is 15, I've got it at 4 hours here, and a modulo of the current time. So when you do things like get time or aggregation period 15 min, this is a constant that is actually under the hood a very big number. It is this is going to be the number of milliseconds in 15 minutes. So this constant is going to be 1,000, because it's milliseconds. 1,000 equals 1 second, times 60, because there's 60 seconds in a minute, times 15, because there's 15 minutes, and that number is going to be the time frame. Get time is going to be the current epoch in milliseconds, which is the time since January 1st, 1970, or whenever they invented computers. But this is going to be in milliseconds. And this modulo operator, if you're not familiar with it, it is just a division that tells you what that whether or not it's without the remainder. So if this equals 0, then you know that this get time is a divisor of, or time frame is a divisor of get time at that point. So it divides evenly into get time, and this is used for things like trying to figure out where this line might be in a larger time frame. So you would take the current time and then you would divide it by that, or modulo by that, and if it's 0, if it comes out to be no remainder because it just returns the remainder, then 0 means that that's the divisor point. So then the half aggregate is going to be the lower time count. So this is half of the time frame divided by the aggregation period. So this is to say how many bars are in the current aggregation period from this higher period time frame. So if the current chart is, say, 5 minutes, then this is going to end up being 3, because this is three 5-minute bars in a 15-minute chart. So it's just a straight division. So that's the number of bars in the chart. And then down here, it's saying the half aggregate is going to be the whole bar count divided by 2. And that's I'm not sure why they ended up doing it this way. This is where I started realizing I'm going to have to rewrite this script. But it's what it's trying to do is translate this into the milliseconds of the aggregation period. So that's fine. Then it's got a bar start, which mod time is 0. So if the higher time frame divides into the actual time directly, then 1, else 0. So this is a true or false. Is the bar started, and is the bar ended? And the bar end here is checking to see if the mod time is greater than or equal to the time frame minus ag period, which is a very complicated way of doing it, but trying to base it on time and actual time. And then, and this is what I had started with, was adding clouds. I just added clouds to my, I just took the higher order, because you can take a period equals and then set it to whatever period you want, and that's the high, low, open, close, and it'll treat this variable as if it were that time frame's candle. So if you were to do like H1, this is not going to be the H1 of my current candle series. This is going to be the H1 of the higher period candle series, and that actually caused me some problems, and I'll show you how I got around that in a little bit. But anyway, the rest of this is just drawing out the candles, and there's this kind of complicated way they do it to do all of this logic to say if it's mid-bar, so if it's that halfway through the aggregation period, and it's up, which means the higher order close is greater than you open, so it's a green candle, then H, otherwise not a number. So the upward wick, high wick, is going to be here, and then it's close, open, low, and so each one of these are for and then the lower wick, if not up and not doji just meaning that C equals 0. So it goes through all this logic to try and figure out how to draw these candles out, and half of that is because this is kind of an irritating way of having to set this up, because AddChart, and this is actually quite cool, this is a completely deprecated function. It's not used anymore. But the way it's being used here is to just draw random vertical lines from a random price to a random other price anywhere on the chart, which is just cool. I didn't even realize that this was a thing, and so this is mostly what I'm stealing from this whole thing and rewriting it. And this has a label in it too that shows various things that I didn't find all that useful. But the cool thing is this AddChart. So what it's going to do is it's going to try and draw a chart overlaid on the current chart, and you give it a high, low, open, close, and a type, and then the color. Because you have to pick a color. It only allows you to do them in one color, which is why there's upper wick green, upper wick red, upper wick white for doji. So these are all just sort of hard coded, and these will this DBH will translate, and DBO will translate to not a number, which will just not draw this in if all of this complicated logic up here is not satisfied. So you go through all of this stuff and you plot them all out, and sometimes it draws, sometimes it doesn't, based on that logic, and that's cool. But the problem with this became quickly that the higher time frame candles aren't being drawn according to the actual time. They're being drawn according to some weird ass Thinkscript decided when to draw these, and I'm not quite sure why it draws it where it does. So I modified it, and I'll just add my mine in here so that you can see what it does. And this is, let's make that a 4-hour candle. So right away you can see that this is actually calculating the 4-hour candle correctly now, and it's allowing you to use these higher order candles, and the way I did this was to screw around with empirical values rather than calculated values. And so what I mean by that is I went into all of each one of these, and I added volume because this is going to help me nail down these empirical values in a second. I still have the aggregation period because we need to know the aggregation period, the current aggregation period. We still have a time frame, which is pick what higher time frame you want. I have now a lower time frame bar count still, which then I took out all of this stuff. So I added some notes in here just because it's the bar start and bar end are they don't work. I mean, this mod time, I tried adding hard-coded offsets to these, but the offsets are different depending on the time period. So it works fine. This script, like as it was given to me, works fine up until an hour. An hour is the last time it works fine. 2 hours it starts breaking the way it breaks. 4 hours it breaks, more. and it just keeps it like on up. And so trying to add an offset to this mod time, like if it's above 1 hour, then add, I think it was something like 12. It was 1 hour off once it was above that. So for the 2 hour, I would just reset this to mod time of 12 equals 0. So it would like set it backwards in time just to push that bar start to where to match where it was matching, and that just didn't work on the higher time frames because it was a different and sometimes random number how they would draw the candles and where they would draw them from, because the start of day is going to be different for different equities and indexes. So like an index like MES trades all around the clock except for an hour period after the bell. Regular equities trade generally within a 16-hour period. There are some things that only trade during actual bell hours. And so all of those things, if you try to draw a 4-hour candle on a chart that includes all of that information, the way TOS draws these candles is, and with an index you're not going to notice this, but on a small cap that's rarely traded, you'll see a bar, and then the next bar might be 20 minutes later or 4 days later. There's no way, because if there's no trades, it just sort of collapses all the space in between them, which hilariously is super bad for technical analysis. You can't do technical analysis if time isn't a factor like that, because it screws things up on larger scales. But the other problem here is that then you can't use a bar based way of determining what the higher time frame is doing. It just won't work because you try to calculate it by using bars, and the bars don't match with actual time. Unless you're using a chart that's locked that way, but this, that's not the default here. So what I ended up doing was, and then I tried this bar start equals, so I'm saying if the H doesn't equal the H1, but quickly I realized that this is using the higher time frame candle array. So when you say H1, you're saying the previous H1, and that's always true. Like as long as the high is different between this 4-hour candle and the last 4-hour candle, every single one of these lower chart candles will return this as true because they're helpfully giving you the access to the higher series. It's smart enough to know that this is a higher time frame series, and so it gives you the higher time frame series answer, which I don't actually want. What I want is whether in this bar, this bar's H is like higher time frame high is not equal to the current higher time frame high, which means that it's switched, so that the bar has switched between this bar and this bar, which I was kind of surprised by, and it was also like tough to figure out a way around. But the way I ended up doing it, so I tried various ways, like plotting it. I tried doing a plot and then checking the plot, but the plot is smart enough to know that it's a higher order time frame. But it turns out what you can do is, and I tried just adding 1 to it, but it kept it within that context. So what I did was I added the current high, or subtracted the current high and added the current high. So we're back to the original H, but now we've thrown it into a local context. So this is now, this value CH is now based on this lower time frames, like the actual chart candle. So this H is no longer the higher order time frame. So we've had to like do this hack to make a higher order time frame into a lower one, or to access it on the lower one so that I could see if it changed. So then what I do for bar start is just check the higher order, all of them, open, close, high, low, and volume. And if any of those are different, then we draw a new bar. And the thinking behind this is that now we have an empirical bar because the higher order time frame knows when its bars are. And it knows how to draw those bars because it's accessing the higher order time frame array. The data in there is that higher time scale. So if there's only, say, 2 5-minute bars in a 4-hour period because the trading is so low, that 4-hour bar will only be those 2 candles wide, because that's, it'll automatically say, well, this is a 4-hour period. So we're using the Thinkorswim higher level candle series itself to draw the candles now. So we're saying bar start is if these are ever different. So if you ever had a situation where the volume and this could happen on a doji where somebody buys one share of something and then 10 days later buys one share of something at the same price. You have a high and a low and an open and close that are exactly the same, and it will treat this as the same bar. But if you're trading shit like that, you've got bigger problems. So this is a pretty good way. We've got 5 different variables to test whether they're different, and one of them is going to be different, especially on something that's traded with any kind of frequency. But more importantly, this will then use it puts bar start in the higher level time frames actual candle value, where if it's different, then we know we started a new bar. So the way they did the bar end on the other one was to do a bunch of other complicated things, but all you really have to do is say bar start -1. So again, this is the array indicator, right? So bar end, like CH here is really CH0. This is the same thing. So the brackets represent the current candle array, the constant march of the candles, and the 0 is the current candle. The next time this is calculated on the next candle, that'll be the one in the future, because a 1 means 1 candle in the past, 2 means 2 candles in the past. 0 means the current candle. -1 means the candle in the future. The next candle into the future. -2 would be 2 candles into the future. So what I've done here is to just say the bar end is really just the first candle before a bar start. So if my bar start, 1 candle in the future, is true, so if this evaluates to true, so we have a bar start candle, then I want my bar end to be the candle right before that. And this is really just so that later you can say bar start or bar end equals 1, so that you can cut off the clouds. Because if you don't do this, for the bar start at least, then it will not make the clouds have a solid line on one side of it. It will try to draw the clouds together, so you'll actually have these 2 clouds will end up connected, and it doesn't look like a candle bar. So this is a cooler way of doing it. It's a little more complicated, but I really liked it. I thought it was pretty neat. But I did have to jump through all of these hoops, which is just kind of silly to try and work around what Thinkscript actually gives you for these higher level time frame candles when you change the period. Which, it's cool to know, but it's also cool to know that you have to work your way around it. And I suspected there was a workaround. It just seems stupid that this is it. And you could have probably done this with high on all of these. So like open minus high plus high, close minus high plus high. It doesn't really matter, as long as you're using something from the current context, not just a number. So like this H, which represents the higher time frame high, so the 4-hour high in this case, if you just say -1 plus 1, it's still in the context of the 4-hour high. That's how Thinkscript actually is like, smart enough to know that this is a different candle series that you're working with, unless you add the current candle series to it. That was the trick, because then this forces this variable to be based on the current candle series, the lower time frame series. So anyway, that was kind of cool. The mid bar then is just half of the lower time frame bar count. This is not great. What I need to do is actually run through the bar start to bar end. I haven't done this yet, but I need to run through the current bar start to bar end, because the width of that in bars may not be the full width, because again, if it's not very well traded, you could have like 10 days between bars, and then it's looking for, your 4-hour candle is really just 1 bar wide. You're not going to have a upper or lower wick on it at this point, because the mid bar is going to be wrong. So that's something that I need to add to this, and I probably will before I release it out there in the wild. But then open bar is really just a thing that says if we have an open bar, then we're going to have a side. We're going to draw a side on it, and that shows up a little bit later. So then we figure out whether it's, if it's mod time isn't. I'm not using mod time anymore. I'm just using bar start, because if it's a new bar, then we draw a new side. And if the side is the first side, then we say side equals 2. Otherwise, we keep side as 1. And if it's not bar start, then we just keep going. like we just move forward with the one, and then this comes in here when it's drawing the cloud. This is just the logic to say whether or not it's how it draws the cloud. So it actually draws these slightly different than it, based on that logic, so that it can actually close off the candles and not connect these. It's a separate cloud. So it knows in between these two candles there is no cloud, but now we start a new cloud, and so it draws that in. The yes at the end of the cloud, again, like if you look in the Thinkscript reference, that yes represents whether it wants to draw borders. So it's drawing the upper and lower border here, and that's where those come from. So at this point, if this is all we had and we didn't have any of this AddChart stuff, we would just have a cloud that had an upper and lower border just like this, that was the right color and the right distance. So what we want is to have these wicks drawn in, and then the sides to make it look like a candle. And that's this kind of neat deprecated function, this AddChart function, which I didn't change any of this. I mean, this is exactly how this thing works. And now that I know that works that way, I'm going to start using it to drawing vertical lines on the chart, because it was deprecated back at least in like 2015. And the fact that it's still lingering in the code means that they haven't yanked it out yet, which is awesome, because you can use it. But the downside is that you can't do cool things like use conditionals for color, because it's too old. I mean, they never updated it either. So it obeys the laws of Thinkscript from way back when, rather than being able to do cooler things with it. But that's fine, because it works. And then again, these are just the dots. So the upshot is that now, like when you go through here, it automatically draws in the candles unbroken, whereas before it was in the original candle overlay script. If we'll make them both 4 hours, so you can kind of see the differences between them. So you can see that like my candle is drawing in where it's supposed to draw in, and these ones are drawing in this like kind of weird broken area because it doesn't line up. It may have lined up at one point, or they may not have cared about the higher order candles. But either way, it doesn't work quite right. So I just when I drew it this way, it means that now all of a sudden I can do things like have it be anything. Like whether it's for the day or for so you can have any, and you can even add more. This is going to be the thing that's going to be really neat for me. Part of the reason why I wanted to do this in the first place was to directly see how some of these candles would overlay. And actually, so this is 5 minute on a 6 minute chart. This isn't going to work. It's just going to throw an error and show you that it doesn't work. I may add some correction in there that if your aggregation period is higher, it'll pick the max of the two. So no matter what, it won't throw an error, but I don't really care that much. But the nice thing is to be able to do these different overlays, where you can have, you can add a lot of them. So I have a day, an hour, 4 hours. So now we have all of these multiple candles on here, because one of the things that I've been thinking about is the fractal nature of price action and how it works and why we use different candle charts. And the reason is because we are trying to understand how price action is moving through time. So the candle makes that a discrete chunk. We chop it into a size. We say, okay, this is a 1 minute chart. So each one of these candles represents 1 minute of price action. And within that price action, the price never got above this, it never got below this. It started here and ended here. And because that's up, that's the trend is up. So what this means in terms of candle theory is that the wicks they represent the volatility of that candle period. So on a 4 hour chart here, the highest it got was up to here. So this is the volatility, the upside volatility of the 4 hour range. And then the body represents the value, the trend, the return, on rate of return on this trend. So like even though it dipped below, overall it opened here and closed here, which means the trend, you can draw a trend as a diagonal line between the candle body. So that's the value of this candle, is this rate of return at this But obviously if you go into a smaller candle, so now we look at the 1 hour candle within the four, because you've got four 1 hour candles in here. The rate of return is a much steeper slope, and this is the fractal nature of things, because here it's actually negative, even though overall it's positive. You can have negative areas within here. The reason this is important, and the reason I wanted this study to work properly so that I could actually start looking at price action in these sort of fractal discrete chunks, is because it helps me to understand my bias. You have to look at higher order charts so that you can see which way the overall flow is going, but you can't just say I'm bullish or bearish. You have to say I'm bullish or bearish at a particular scale. So on a 4 hour scale here, I'm sort of bullish. On a 1 hour scale here, it's super bullish. So and because you're looking for continuation, probably coming out of a candle like this, you're hoping that since there wasn't a lot of volatility represented by the wick here, that it will keep going up, and it does. And it doesn't as much. So, at that point, the trend actually reverses here. But overall, from here to here on this much wider chart candle, it's sideways. I mean, this is a consolidation candle from here to here, which is the better chunk of a day, right? So that's just like one example of how the fractal nature of price action can really, you have this big dump. This was an FOMC response, and it dumped really fast, and so it's very, very vertical on a very short time scale, and it ended up being pretty solidly vertical on a much larger time scale, but on a much shorter time scale, it ended up like all of this volatility just sort of made it look much more like the value of this 1 hour candle was actually uptrending, even though the wicks were so high on it. And so you have to understand that when you are looking at any chart, like a 4 hour chart, you need to be able to translate that in your head, that we're actually looking at a lower order chart. So this is the 4 hour chart, and this would be the day chart within that. And you can see the 4 hour chart of this would have been the last one. So this is my 4 hour chart over here. You can see it stair stepping down, right? It's stair stepping down through here. But that doesn't mean that you can't have areas of uptrend within that. So you can totally play along within that. But if you know that the trend is going down, especially the way this was curving at that point, you're probably safer looking for a short at that point. You don't really want to get in long here, because there's this isn't necessarily a reversal. The overall trend over the last couple of larger scale candles is down, and so you're much safer trying to find where the pivot is and shorting it, short any of these pivots, because the whole trend is down. So now that we've hit the bottom, you would not necessarily know, you're looking for an upper pivot here and you don't get one. And it's possible that we won't. It's possible it'll just keep going up. So at this point, we may not be in this 4 hour downtrend. We're going to have to wait and see what this candle does. If the next one, the next 4 hour period pushes it up further, that's at least consolidation on a 4 hour period. So like that should help you flip your bias. But then as you zoom into these things, you can see that the 1 hour chart is a lot more up and down, and so within that you may be able to say, okay, I know that this has gone down, and then once it starts rejecting and it gets above this is why you have these candle patterns that you look at, because on this level it's a nice pivot where you have this nice flat bottom, but you also have it on the lower chart too, which being able to overlay these candles like this may help you be able to judge those reversals more easily. But even not, after you see something like this is a pretty hard rejection of this level down here. So if it turns back around, I may flip my bias on at least the 1 hour scale to long, from just consolidation on the 4 hour scale, because this is a huge wick on the 4 hours. So this is the 4 hour candle. This is that 4 hour candle wick, which is most of these 1 hour candles. This entire candle of the 1 hour candle, this entire red candle is just a wick. It gets eaten right back up. So when you look at it this way, it may help you form your bias correctly, just to help you make safer trades, more reliable, more predictable trades. Because if you know the overall which direction the trend is going on a higher scale, then use that on the lower scale to trade. So like, yeah, you can long it, but if you're, at some point it's going to turn on you. Probably, it might just keep going up. Like right here, you might think, well, I'm going to short it here, and then it reverses, not that far down. And at that point, you got to think this is starting to become consolidation on a higher level. So then stop shorting it. I mean, at any point here, just start scalping until something resolves. But anyway, I will post a link to this this study once it's finished, probably on the video, and I'd love to hear feedback.